So you're trying to buy a house in California and it's just very hard to get in there. You're a little worried about the market. Maybe the market you're thinking is going to go down, so you're trying to find a good deal, which I think whenever the case is, you need to find a good property. So you're looking for fixer-uppers. You find a house and the counters are thrashed, it needs a new fridge, you need a new sink, you need new plumbing, the cabinets are falling apart, there's no oven, and you can't get a loan. So you go there and it's a great deal. The neighboring houses are selling for $150,000 over what this house is for, but you go there and you go, it's too big of a fixer, I can't get a loan for it. And even if I could get a loan, I have to come up with the cash to fix the property, and I don't have all that cash to do that. So there is a solution to this, which is why I'm making this video. I've used it myself personally, and I've also helped clients use this product. It's a 203K renovation loan that's an FHA loan. And this is great for when you're buying a house to live in and it's a fixer-upper, because what happens is the lender actually will pay for the purchase of the home and for the renovation cost of that home with a minimum down payment of 3.5%, which is phenomenal. So how it works, and there's first of all, disclaimer, I'm not a lender, I'm a real estate agent, but I've dealt with these loans and dealt with these types of properties for 8 years. And a lot of times when I'm flipping homes, I'll get private money or hard money, and those are a lot more expensive of loans that require a larger down payment than these types. Now, I have used these types as well. They're great for, I think the best use for these is for owner occupants. But there is certain loans, and it's not the 203K loan, but there's good ones for investors as well. So contact me if you're an investor and you want a lower cost loan. I could tell you about that and connect you with the right lender. So the lender is going to be the one who really steers you right in the right direction and tells you what you could qualify for and really what a good match for what you're doing is. A good match, what kind of product, what kind of loan is a good match for you. And so I'm making this in May 2019. Lender rules change all the time, so if you're watching this in the future, you need to talk to an agent, you need to talk to a lender to really get the details, okay? So I want to give you just a high-level general idea of how this works, and there's a lot to say about this, so I'll try to keep this short. Say you find a house, it's $500,000. It's going to take $50,000 though. It needs everything I just mentioned. It's going to need a complete makeover, new roof, new HVAC system, $50,000 worth. So what happens is you get a contract, you get into contract with that seller, then you get a contractor to come in through the house, and they're going to give you a bid off of everything you want. Maybe it's new flooring, new paint, whatever it is. $50,000 bid, whatever that number is. It could be $200,000 bid. And we're going to give that to the appraiser. So when they appraise this home, they are not appraising the home in its as-is condition. They're going to appraise this home as they call the after repair value. So they're gonna appraise it based off of, they're gonna pretend that all these renovations were done, and then they're gonna tell you what it's worth when all those renovations are done. So they're gonna call that the after repair value of the home. So they're gonna look at sales comparables for this home now, are going to be all the up-to-date, trendy, turnkey, clean, remodeled type of homes in that neighborhood with similar age, square footage, bedroom, bathroom, and they're gonna use those as sales comparables for this property. So it is very important when you're looking for these homes to have a real estate agent who knows how to find a good deal, to recognize and to analyze what the after repair value would be. And so that's definitely a part of the strategy as well. So lender and a good realtor, or if you're really good at it yourself, then that's something that you could do on your own time as well. So what happens is you get this bid. So now your total cost into this property is $550,000, but now it appraises for $600,000. And so you're only having to put 3.5% down on $550,000. You're not putting a 20% down, but you have a large equity position because you improve the property, you increase the value of the home as a flipper would do, or as somebody that's an investor would come in and improve that property to make it worth more. And I'll give you one example. I love this experience. It was with a client of mine. She was in her 60s, and it was actually her first house she had ever bought, was in her 60s, and she barely had enough money for the 3.5% down payment for this property. We searched, we finally found a distressed home that was a fixer-upper, that was not financeable with conventional financing, and a lot of people thought it was only a cash deal where you have to pay cash for the property. We got into escrow, we got it accepted because we had a good lender who was able to do these types of loans. After all costs, so purchase price and rehab costs, it appraised much, much higher, instantly higher than the total cost that she was into that home. And so I just love that because she had instant equity. Even though she didn't put a very large down payment, she only put 3.5%. She already had equity built into the home, so she's really leveraging, she's getting a higher return on her cash on cash return. Just amazing, super, super amazing. She was so happy, and I just love seeing that. That was a great experience. I feel like it was just such a benefit to her, and that was just so amazing. And the type of buyer I am personally too, is I'm always looking for that deal, and I know everybody wants a deal. Sometimes you have to be creative, and there's just a little bit of a learning curve to really get a good deal. So if you have the time to figure that out, or I say consult a real estate agent that's going to help you with that. And I'll leave it there. But it's a FHA 203K renovation loan. And for investors, there's a Fannie Mae home style loan. And again, they're always changing the names of these. So, contact the lender. Okay.